everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a great Monday. Welcome, welcome, welcome. Happy Monday, everybody. It's a new ticker Monday, and I hope you guys are ready. We're going to be covering NextEra Energy, one of my favorite stocks, actually, that I used to trade a lot in the past, and I don't know why I stopped trading it, actually. And we'll see what happens this week. I was actually going to plot something here and I completely forgot to do it, so I'm gonna do it right now. This was the channel that I was looking at. Yes, exactly like that. Alrighty, let's see here. There we go, perfect. Okay, cool. Well, welcome in. Hope you guys are ready with coffee and bagel. While I'm here ready with water. I just got out of a gym session. Been trying to keep my mind and my body in sync. It's been really difficult. I have finals coming up this week on Saturday and Sunday. This will be the second quarter of my master's program. As you all know, my first quarter I aced that with the 4.0 GPA, and I'm hoping to ace this one as well. I don't think so, though. This quantitative finance class is really kicking my ass, and, you know, I just want to be real with you guys. I feel like I'm going to get a B this quarter. I feel like, I don't know, I just have a feeling in my bones somehow. But you know what? Doesn't mean I'm not going to try my hardest. You know me. I never not try my hardest, so I'm going to give it my all. I'm going to spend the rest of this week studying like crazy. And, you know, all the way through this week. I'm sorry to say, but I don't think I'll be holding any live trading sessions this week. We will do live trading sessions next week, okay? I'll try to do one on Monday and then on maybe Wednesday to make it up to you guys, okay? So that's what I'll do so that I can make up for a lack of live trading session this week. Maybe we'll do 2 next week on Monday and Wednesday, and that way, you know, make it up to you guys so that you guys don't feel like I'm trying to juke you guys, which I'm totally not. I just need to make sure that I get this done, okay? Also, you know, as I've been saying, you know, closer to the middle of December and the third week of December, you know, hint, hint, there are some big things coming. You know, I know I keep saying there are big things coming, but, you know, you guys really don't understand how big these big things are. So they're huge things, you know, but like, you know, big things are huge things and huge things are big things. So when the big things become huge, then you'll know. I just love teasing you guys, to be honest. Good morning. What's up, Konstantinos? Welcome from Greece. Appreciate you taking the time being here. Melissa, good morning. Hi, Azusina. What's up? M, good morning. Let's go. Hey, Type 9 is here. What's up, man? My beat provider is here. You guys should all, if you guys enjoy all these beats that I play at the start of the stream, throw up a heart emoji for Type 9 who's here in the stream. He's the one who creates all those beats for the EGA channel. Also, needless to say, please give him a shout out, man. Like, go to his YouTube channel, comment on his stuff, show him some love, because this guy is all love. He's got such great vibes. And remember, his YouTube channel is Type 9. I think I have it here. Let's see. No. That's under my subscription. This has got to be here. It's got to be here. Type 9 right here. Here. Make sure you go. I'm going to put the link in the bio so that you guys can, you know, go show him some love. There you go. You know, throw him a subscribe. This guy produces some fire beats. You gotta show him love. This guy has been on point since I've known him. He's been supporting the EGA channel since day one. So thank you very much for all that you do, man. I appreciate you very much. What's up, Boston Mayhem? Good morning. What's up, Santosh? Good morning, Dravidian. Hello there, Francesco. Welcome back. Iqbal. Hello. Zoraida. What's up? Aaron. Hello. Ryan. Big City Sound. What's up, man? Anders. Hi. All right, let's get this going. Jacob, what's up, man? Michael, hi, all you guys. yeah. All right, cool. So, looking at the news today, you know, lots of unrest still continues in Asia. I've been talking about this a couple of times, right? About the civil geopolitical unrest that's happening around the world. Make sure that you guys keep on top of all this stuff. It could easily cause, you know, some kind of a political tension that may or may not be a good thing in the long run. So be careful with that. You know, as the protectionist kind of mentality continues on, you know. Let's see here. Gems, jewelry exports from India recover sharply. Stocks slide and the pound drops. Bob Dylan, da-da-da. Okay. Bank-driven squeeze, da-da-da. Okay. Pfizer serum seeking COVID vaccine approval. India accuses China, da-da-da. Okay. Sinopec is a Chinese conglomerate for I believe oil and gas, maybe, I feel like. Goldman puts Florida based for asset management and blow to New York. Oh, wow, that's a big one. Okay, then. Wall Street Journal. U.S. stock future slides. COVID cases rise. Not really a slide, to be honest. It's just a normal correction in the uptrend. We broke out of the technical downtrend that we were potentially seeing a double top. It's now no longer a double top. We actually broke out of that, came down, test the resistance as a support, and I'll go through that in the technical update in a little bit. So make sure you guys, I'd say buy the dip, man, at this point. Buy the dip. Buy the dip, but then be hedged. I would definitely be hedged at this point. So do smart investments right now. You don't want to be too overexposed to the upside. You want to be exposed to the upside and hold some hedges as insurance so that you can get a cumulative average gain that is net positive if something goes wrong. Okay. Small hedge funds reap big gains in tough times. That's pretty much the name of the game. Crude oil treasury debacle leads for fine for Chinese bank. Airbnb IPO valuing is up to 42 billion. This is interesting. And remember, guys, all these IPOs that are happening this year, who makes money from these IPOs? Investment banks. Okay, this is the reason why I'm accumulating positions in XLE and XLF. Okay, remember that. I've been talking about this for a while. All right, XLE and XLF. I've been accumulating positions for my long-term portfolio. So every time there's a dip, I've been buying a little bit. Okay. Just FYI, guys, I will not be trading for a couple of weeks. The reason being, I have officially closed down my Robinhood account. Okay. I used to hold a lot of my long-term positions in that account, and I'm moving all of my capital out to Interactive Brokers, and I'm moving it out also to TOS. But this TOS account is taking very long to open up because it's TOS Singapore, and so I just want to keep you guys in the loop that I will still be providing you guys with the ideas, but at the same time it's going to be a while till I take trades. Okay, so just as I get all my stuff settled here with my new broker, open up a new account. I'm planning to fund 2 accounts, one with 10K, the other with 5K. The 10K account will probably be a longer term account where I'll show you guys how to pretty much do the EGA pathway of success. Okay, where we invest in shares and then we sell some calls against those shares or sell premium against those shares and build a longer term portfolio using risk management tactics, our option strategies. Okay, and then the smaller portfolio at 5K is probably going to be a day trading account where I'll be taking lots of day trades and scalping and that kind of stuff. So that's the aim in the future, and it's going to be a completely transparent account, so you'll be able to see me trading live on my platform over here. Full transparency, because I don't believe in hiding any of that stuff. So over the long term, I hope that this full transparency method is going to really help you guys out. Okay. Okay, let's see. Cool. Now, what else was I going to say? I swear I was going to say something. Okay, never mind. ExxonMobil under shares. Okay, cool. Let's have a look at the heat map here. And I want to add one more thing to our pre-market updates here. So you guys know I look at the S&P 500 yield and also the Treasury yield curve. Those are 2 things that we have been adding on to our analysis on a daily basis. S&P 500 yield here. Oh, what? Where is it? Where'd it go? Oh, okay, 1.62% for November 2020. Okay, so S&P 500 yields at 1.62%, and the bonds for the 10-year are at 0.97, 30-year 1.73. We can see potential crowding out of equities soon. Okay, as investors start to look at bond appetite here. Well, people have been actually crowding out of bonds recently. If you look at TLT here, the aggregate for 20 plus years bonds, you can see that is being sold off big time, right? And there's just a risk off. Well, sorry, a risk aversion here. People are risk on here, not risk off. Sorry, because people don't want to hold bonds here. They expect higher return in equities, and therefore there's going to be this rotation out for a while. Okay, so keep that in mind. Also, really appreciate if you guys take a second out of your day to smash the like button. You know, that's the only thing that I ask from you guys. If you come to the stream, you enjoy it, you know, you like your time here, make sure you just hit the like button so that, you know, this stream reaches other people. And I appreciate you guys being a part of the EGA tribe, and we want the EGA tribe to get bigger. So, you know, by you hitting the thumbs up, the like button, that really helps me out a lot, and I really do appreciate that. Cool. So I want to add another thing here will be, from now on, we want to look at insider trades. I want to look at the real-time insider buys and sells, and I'm looking at mega caps. I don't want to look at the smaller companies. So I'm going to be pulling up the mega caps and pulling up by the date so we can see what kind of insider is buying or selling shares, because we want to actually, you know, figure out those things. Sometimes it's important news, okay? Looking at the scanner though, we have oil and gas that is currently being the laggard today. Apart from that, semiconductors seem to be doing okay today. AMD still on the uptrend, pushing up higher. I've already posted the watch list for today. If you guys haven't looked at it, the link is in the chat. I've pinned it. You can go have a look at it. This is the watch list for today. Active trades wise, we don't have anything over here. We didn't take anything. I have been pretty busy, and I've been rotating out of my brokers, so therefore, you know, I haven't taken any trades. I won't take trades for a while. So if there are any signals, I will put them here though. You know, I'll still write them. You know, like where I would enter, where I would exit, and that way, you know, you guys can have a good idea. Remember that I don't really prefer calling these signals per se. These are more like my educational recommendations, like what I think is a good idea based on risk to reward, based on the you know, a bunch of different things. Okay, and remember, this is not like a usual watch list. If you read this, you'll understand what I mean, right? You can see we put in a demand zone, a supply zone for you, a catalyst, our EGA risk opinion, and then, you know, a time horizon. And then if you click on these links, you can see a chart as well along with it for each of these trades with, you know, the idea here. Okay, so I want you guys to make sure that you don't look at these as signals. These are more like opportunities on our watch list that I'm watching that I think are good prospects for the day or even for a swing trade. Okay, so maybe into the next few days. All right. So on this list, something that's not on this list that we are still watching is Baba, okay, Alibaba. And Baba has been moving very nicely. I still think this may continue to, you know, make a valid move to the upside. We'll see if that actually happens. But, you know, this looks like it's forming a ascending wedge here, okay? And we are hoping that, you know, this kind of continues its trend here up to the uptrend, all right? Oh, that's too thin. We need a fatter point there, right? We have this kind of a wave pattern going up. The supply zone remains over here at the 273 level, so keep that in mind when we approach that level. Okay, can you share the spreadsheet? X marked to spot. It's pinned in the chat. Look at it on the top. You'll see it. The spreadsheet's pinned. There's a link there. You can click on it. Apart from that, tech seems to be pretty much break even. Financials a little red, not too crazy. That's just going on by the markets. If you look at the 1 month performance of the market though, you can see everything red except for Facebook CRM, which is another one that we really like, by the way. We have been talking about this one with our internal team. We feel like, you know, this is an irrational, exuberant sell-off. We think CRM has the capability to rebound here to the upside. I think that this is a strong buy. You know, for this company, you know, it came down to close this gap over here that was formed over here. So we had this gap fill. We filled to cover it here, and now we actually came down to cover this gap. Now I think that, you know, it can actually make waves up. So CRM is a great buy here, in my opinion. I would take this to the upside. Risk to reward ratio favors the upside. Company is amazing. You know, fundamentally sound company that is trading below valuation here. Okay. Margin of safety is also good, by the way. So yeah. Okay, cool. Let's see. All right. So insider buying and selling here. What I saw was Walton Ellis, so a bunch of Walmart, you know, owners selling some stakes. What is this? Like, not a lot, but, you know, they basically sold like what? I want to see. I'm not. Well, I guess. Here we go. Let's have a look at this real quick. Does it show me? Come on, show me. Why doesn't it load? Huh. Okay. I guess all three of these guys, they sold. Well, Ellis, Robson, and Jim. They all sold a bunch of shares here. Insider trading shares. So, I wonder if this is the number of shares they sold. I don't think so, right? Or wouldn't that be too much? And that would be $63 million worth of shares. Maybe it is true. Maybe they did sell that many. Final share. Final share. Wow. Robson has got a shit ton of these shares. Damn, son. Price change. Okay, not really that much of price difference. Dividend yield, PE ratio. Okay. Mark Zuckerberg also sold some Facebook shares, by the way. What? Like 3 million here, 14 million here. He's probably buying something. On the 2nd of December, he sold some shares, 279. 270. Yeah, he's pretty much sold some shares here. Mark Zuckerberg has sold some shares. So, you know, keeping track of these things are important, okay? Now, when an insider sells shares, it could be many things. But when an insider buys shares, that's like usually just one thing. Whenever they buy shares, that means, you know, it's a good sign. But whenever they sell shares, it could be, you know, for a big ticket purchase. It could be a bunch of different things, right? Look at this one. Visa's SVP sold a bunch of shares as well. ServiceNow director sold a bunch of shares. 20 million. The smaller ones don't really bother me that much. This guy, look at this. Alice also sold another 103 million worth of shares. Look, 63 million here, and then 103 million here. This was sold at 152, and this was sold at 149. She's unloading shares. Alice is unloading shares in Walmart. Okay, she's one of the owners. Well, one of the you know, the board of directors. You know, either she knows something, and Walmart's been in a technical bearish formation here. You know, so these are interesting things to keep track of. Okay, and I want to add this to our pre-market scanning or pre-market watch list here. You know, like the things that we are looking at on a daily basis, because I truly believe that these are important facts that we need to look at. You know, insider selling and buying are things that we need to look at when we're actually starting a trading day. President and CEO of NVIDIA sold 100,000 shares for 53 million on 1st of December at 535 bucks. And so shares went up a little bit higher. NVIDIA has been on a nice uptrend, to be honest, here. Also forming like a technical wedge here, I would say. You know, nice little ascending wedge. I like this play to the upside, by the way. If we can get a break above this 547 level, 548. Well, actually, somebody's put an alert at 550. This alert's good. 550 is a good time to take NVIDIA here. You know, breaking out of here, confirmation, you can easily cross up back to 580s. This is another one. Okay, cool. And then, you know, you can go have a look at the Zuckerberg sold more shares here. You can see all this. Jim Walton sold some shares here. Dude, this guy's got a lot of shares, man. He's got a billion. Oh my God, this is disgusting. Yeah, this is 1 billion shares. He can sell this many shares and still have this many shares left. Jeez. Wow. Yo, somebody hit this guy up and let him know that I'm just asking for like, I don't know. I just want like 100,000, you know? 100,000 shares. Is that too much to ask? You got 1 billion, man. Just give me 100,000, okay? That ain't nothing. You can afford it, right? I'm your homie. I'll put that money back in your stock. Like, okay, fine. Like 50,000 back into your stock. How about that? How about that? Facebook, Fisher David, Chief Revenue Officer, sold some. Tesla, Will Thompson, Director. More Zuckerberg sold here. More Zuckerberg sold here. More Zuckerberg sold here. Zuckerberg has been unloading Facebook shares the whole month of November and, you know, the whole month of November and December. If you think about it, he's been unloading shares. This is interesting, don't you think? Let's see here. Okay, cool. That's it. So keep these things in mind, okay, when you're trading. It's important. I've bookmarked this page and I set a filter here. I'll probably fine-tune this filter a little bit more for the next time we look at this. Pre-market movers, anything interesting here? Not really. NEO down again, 1.6% after having a crazy rally last month. Not really. And Willem Samoma, Highwood Properties, okay. Schneider, MGIC, nothing here. Diamondback Energy, this is a energy company. Oxy, down 2%. Marathon Oil, some oil going down because of OPEC. Let's see here. Okay, not much here. Not many pre-market movers. All right, let's go through the daily watch list today. I want to tell you guys, why my team and I chose this particular watch list. So, 2 of these are old opportunities from last watch list, and 4 of these are new opportunities. All right. Okay. First of all, let me read some of this chat because I feel like you guys are saying a lot of stuff and I haven't got to answering anything here. Hey, love you. Let's have a great week. Hell yeah, Landon. What's up, man? Good morning. What's up, Hyman? Welcome back. How are your BA leaps looking? I already sold them a long time ago, Hyman. I mentioned that months ago. GKS 50 put sell for Jan. Okay, we'll get to that later. TD Singapore finally approved my account after 2 months. Already got used to Tiger Brokers, so didn't bother to move to TD. Yo, how is Tiger Brokers? Is it good? Like for options trading, is it good? I have it. I mean, I have it, but I haven't really used it. I do have it though. So I'm thinking maybe I might fund this account. It looks dope though, to be honest. The only thing I'm not going to really use it for charting, but I do like it, to be honest. I might honestly, deposit funds into this account and end up using this one. Looks interesting for sure. Do I need to get approved for options on this one? I don't know if I have to, but I like it, but no stop loss for options. Is there a day trade limit? Like, can I day trade on Tiger Broker? Like, is there a limit for day trading? Okay, while you answer that question, let me read the rest of this. Cool. Best pre-market brief still, thanks, EGA. No problem, Sid. What's up, man? Welcome back. Are you going to be limited to 3 day trades on a 5K account? So, Mubin, that if I sign up for a TOS account, I won't. Let's see. Already done. If you read this, hit like. Baba, can you share the spreadsheet? I did. Okay, just a taste. Okay. Your TSM call out from last week appears to be an entry point. Okay, what site were you looking at just now where you could see the shares being sold and bought? That's Guru Focused. Guru Focus. This one. Guru Focus. Just search Guru Focus Insider Trade in real-time insider buys. That's the website. You said no limits and no need for options approval. Wait, so you're saying that there is no day trade limit, which means I can trade as many times as my buying power will allow me, just like TOS? Is that what you're saying? That would be interesting. That would be great. I could probably set up my 5K account on that one then, in that case. Because I don't really use stop losses that much anyway. I hate being stopped up by market makers. Okay, let's go through this list real quick. So, we have 2 of these that are from the previous time. So let's go through them real quick. TSM, this is semiconductor in a cyclical industry, back and recovering from a bounce. Okay, it's a possible boom phase here. We had seen bullish flow betting on 108 calls by 12:18, and we said this was a FOMO breakout. Okay, and look at what has happened. Boom. Pre-market up at 105 already. If you followed this call out, you would have made money on this if you followed this since last week. Okay. Unfortunately, obviously, just like every single time, I give you guys the signals and then, I end up not being able to take them myself because I'm switching brokers. But if you would have taken this trade, it would have been a nice upside since that time we called it out. It was trading right in this zone here. I mentioned it was a nice time to buy it, and boom, it's gone up, and now it's broken above the high here. So this may do a continuation run today, all the way up to 108. There's a chance. I would say day trade / scalp this one today. If you can get an entry, make sure that you don't be taking this on the wave up. Okay, do not take this on the wave up. Wait for the pullback, a test of the support once again. This dual zone possibly on the 5-minute chart, right, of the 103 level, and then play the upside here. Okay. Something's got to find this one so you don't try max out. Okay, cool. Got it. Okay, now, so TSM, the strategy is, and as I said, giving a potential entry, but be cautious of the spread, okay? Remember one thing about this is, if you're trading the option, make sure you're looking at the IV, okay? Do not be trading IVs that are more than, 80% or, even 60% to 80%. I honestly, I find it iffy. That's going to be way too high, okay? So make sure that you balance out your risk to return. This is like a FOMO play, okay? This is a FOMO play. That's why we call it FOMO breakout, all right? What is FOMO? It's the fear of missing out. So there's a chance that people will continually push this stock up because there will be momentum. Okay, this is the psychological play over here for this week. RTX, this was our ticker of last week, and we continue to hold a potential bearish breakout. A bearish rejection here. Okay, so looking at RTX here, we continue to think that this is a bearish opportunity. All right, might be potentially a double top here, continuing a fall here. So this is actually a great opportunity for you to get out. Sorry, get in, not get out. But however, we don't want to play this right here. We want to play this upon the break, and I spoke about this last week. We want to play this upon the break and the retest of this and then rejection. That's when we want to play this to the downside, okay? So we don't want to take this here. We're going to let this one marinate. This is going to be a new term that you're going to hear me say a lot on the stream. We're going to let it marinate. Okay, so marinate means we're going to wait for a little bit till we get the right amount of momentum and the right setup here, okay? But this is a potential opportunity. I just want to bring it up to you guys, all right? Because we see this rejection off the supply zone, and if we see it happen twice, there's a high chance that this drops, comes back up, tries to test this zone again, once again, and then drops further. So we do not want to we don't want to take this on the first drop, because that could be a false or a fake drop, and then a continued upside. What we want is the continued downside, the upside, rejection of the supply zone once again, and then the continued fall. This is where we want entry. Okay? Fair? Easy to understand? All right, cool. That's your RTX play, okay? And this is why we have both of these still on the list, because we still like the risk to reward ratios on these. And we saw the flow on TSM, therefore, we like the idea, okay? That's two tickers that we're doing. By the way, guys, I really hope that these breakdowns help you out, because remember, we're not trying to give you a signal here. What we're trying to do is make this into a educational idea that you can understand where we're coming from as traders, okay? And give you the breakdown so you see it from our perspective, okay? Because to be honest, let me tell you something, and these are mostly technical breakdowns. We're doing the technical breakdown, but when the time comes, we're also going to mix in a little bit of fundamentals, and you'll see those opportunities arise. Like how, for example, we were talking about Baba last week. We know Baba as a stock is undervalued, right? We know this stock is undervalued. Our valuation for Baba is at... Oh, wait, I swear I put Baba here. Huh, interesting. Baba valuation is close to $300, okay? My Baba valuation is close to $300. It's up here, okay? So my valuation is up here, so the stock is fundamentally undervalued. So therefore, when you put this together with the fact that this stock is making a higher high over here, this makes a great setup, right? So if you're actually enjoying this new phase that we're embarking on in EGA, and I know this this little watch list here, I don't know if you guys are enjoying it, but your feedback is going to help me to improve this stream and make it better for you guys. What my aim is to make this purely, really, really educational so that I can help you out, okay? And so by you giving me your feedback, that helps me out a lot, okay? Make sure you guys, if you're enjoying everything that we do here, if you can help me out, hit the like button. That's all I ask from you guys. Just smash the like button one time. That's the only way this EGA tribe is going to get bigger, okay? And, we will have a lot of fun, all right? Okay, now let's look at the new tickers for this week. So the first one, Disney. This is the one we want to look at. We like this as a continued bet to the upside, as all indexes are looking bullish, and Disney is part of the S&P 500. So Disney here, we have a demand zone at 129, 136, supply zone at 154 plus. It's trading at all-time high, looking for a breakout to the upside. Disney has done well with the streaming services, increasing their subscribers every quarter. We see a nice little bullish opportunity here, and we want to take this to the upside. Okay, you know, Disney is one we're looking at here. So sitting at pretty much all-time high. Okay, we want to play this as a FOMO play if we can find the breakout and the test. Okay, so right now, and it's been making nice higher highs here. This has been a really nice uptrend. You can see, you know, all the moving averages nicely spread out from one another. You know, this is a solid uptrend, right? Many of you who take the who took the Everyday Growth Advisors mentorship course, you see what I mean by this being a scalloped arrangement for the moving averages, right? So we want to play this to the upside if Disney breaks out. Okay, if Disney breaks out, we also, by the way, we also see volume increasing here nicely. We want to break out, come down a retest of this level at 155, and this is where we want to enter on the next wave up at 156 or 157. Okay, so we want entry around here. Cool. All right, so that's your setup for Disney. This one has to marinate a little too. You might get an entry today if you want to scalp this to the upside. Might not be a bad idea neither. Okay. AMD, this is the other one. Moving pre-market as well. Support at demand zone at 90.91, supply zone above. We want to take this as a day trade / scalp. This is also a FOMO breakout. Stock has been running hot and could continue running. Now the only thing is the risk to reward ratio here actually favors the downside, but we like to continue playing this to the upside as a potential day trade / scalp strategy. We don't want to play this to the downside. And so here's what we see with AMD here. Okay, it's been on a nice little uptrend, and we see this actually, you know, trying to make a little bit of a down before, you know, moving up to this, you know, where I've put this target at. Okay, so I want to say the 23.6, which is $97, $98. That's what my aim is for AMD over the next 1 or 2 days, possibly. We want to see this move up continually. It's been making higher highs here, very nice uptrend. I think that this has the potential to keep going with the momentum. Look at the volume that has come in over the past few days. The volume has been very low, but the stock has been consolidating, which is a good sign. Okay, and this is getting ready to make another move up. So this, I think this week is going to be on fire. So I highly recommend you guys, you know, keep close tabs on the watch list because you know, the ones that we've chosen for you, I think they're really good setups. We do not believe in choosing poor setups. Okay, next one. ATVI, Activision Blizzard. Now, Activision Blizzard, I think they were suing somebody. I forget who it was. There was news about ATVI suing somebody just this morning. So ATVI here, we're looking at cool. Here's what we're looking at with ATVI. It was consolidating in a downward channel here. You can see this, right? And now look at what has happened. Breakout. We see a breakout on this channel here. Okay. Now we want to take this up, and by the way, pre-market's up a little bit. We want to officially take this above 82 if we can continue to see volume here. We actually saw volume come in last week, and we want to continue to play this upside. We actually like this to the upside. It's forming a uptrend here, making higher highs, higher lows, right? You can see this really nicely. If it fails and rejects over here, that's why we don't want to play this right now. We want to play it above 82 or 83 even, right? Because there's a supply zone above us. Don't forget that. This is a supply zone right above us. So we want to play this to the upside if we don't get rejected here. Okay, but I think playing this, if it breaks above 82.50, something like that, is a good idea here. Okay, you know, taking this to the upside. But remember, wait for that wave confirmation. Okay, wait for that wave confirmation. All right, buy the dips. Do not buy the tops. Okay, so be careful here. All right. Now this is also a very slow moving stock, so I recommend you to actually take this one as a swing. Okay, a day trade if you want, but then I recommend it more as a swing. Okay, this is what I would say. The reason for the catalyst of this is that the video game secular trend continues to strengthen into Q4. Companies are probably that are doing video games are gonna report blockbuster earnings, and because everyone's still at home because of COVID, we expect the market to price in positive earnings going into a strong growth into the future. Okay, so we expect companies like ATVI, EA, all of them, you know, to really do well. Also, the risk to reward actually favors the downside. but we once again we see the potential opportunity to play the run up towards a supply zone. So be cautious and set a tight stop loss here. Okay, these are the notes that we look at over here. Okay, and finally the last one is DraftKings, which is strong uptrend, good time to buy on a potential dip. We really like this one. I think this is one of the stronger plays. You can see a nice little cup forming and possibly a handle. It might get rejected here. Okay, there's two things that can happen here. The first is we reject here and move continually up. The second is we actually form the handle, go down into this demand zone, and then start to move up. There are two scenarios here that I see for DraftKings. Okay, I think scenario number 2 is more than likely, where market makers push the price out of this little trend line just to juke investors and say, oh no, it broke the uptrend, and then all of a sudden push down here, grab some liquidity, and then boom, skyrocket up here. Okay, so I think that there is a high chance that this will sell off first before going to the upside. So this is also going to be a marinade trade. Okay, if you want to play this one, I recommend going light and taking it to the upside only if it rejects this zone and starts moving to the upside. Okay, so that's how I look at DraftKings here. All right, so favors the upside, stock is the momentum, buy on the dip. If it continues to go for the other, by the way, the third way is you buy the dip now. If it goes down further, it's not going to go down a lot further, you average down. But the way that one, you have to take further expiries. Okay, so make sure that you're careful there. I'm talking about options, you have to take further expiries. If you're just buying stocks, then it's whatever, right? Okay, cool. How are you guys doing so far? Everybody understanding? Everybody like this new watch list format? Does everybody like what I'm going through? Does everybody understand? Give me some feedback. I want to hear from you guys. Tell me, talk in the chat. You know, give me some of your, what are you thinking? You know, I want to know, because you know, I feel like this is helpful, but I don't know. I won't know until you guys tell me it's helpful. You know, let me know what you guys feel. In the meantime, I'm gonna go through. Interesting. I'm gonna take a sip of water here while you guys type your replies. Okay, cool. Now, you know, this is going to be some real value for you guys over time, right? And, you know, I intend to make this, you know, like a really proper educational stream. So remember, I want you guys to remember that these are not signals, all right? These are definitely not signals. I do not want you guys to look at these are signals. I want you guys to look at these as educational ideas, all right? Remember this. This is not like this is going to happen. You know what I mean? There is no certainty here. There is no, the probability of success here is probably very low, but because we have been doing this for a while, we try to choose the ones that have a slightly higher probability of success, okay? So I want you guys to be cognizant on managing your risk. Remember that at the end of the day, you can scale your risk based on what you're doing, okay? So I'm giving you the idea, and then you need to go and take that trade in a way. So remember that this is only half the battle. The trade idea is half the, actually, you know what? It's less than half the battle. I'm not even going to joke with you. It's less than half. Why? Because, let me tell you why. Because risk management and position sizing, this is actually more important. This is more than 70% of the battle. Okay? Risk management and position sizing. How do you manage your risk? This is the important one. Important. Like, look at how many stars I'm drawing. You know? How many stars? You know? This is the important thing. Because you could know what trade to take, but if you don't manage your risk, you're going to lose anyway. Okay? So, remember, you got to be really careful. Alright? Alright, cool. You guys have the list. You have the access to this. You have access to this over here we're looking at. And, you know, over time, I'm sure that you guys will enjoy this. Okay? Cool. I wish I could have done more trades, to be honest, but unfortunately not possible. Okay, so let's take some time to break down the ticker of the week now. NextEra Energy is the ticker of the week. And this was by popular demand. You guys voted on it last Friday, and so we're going to cover this stock. This stock has recently undergone a stock split. Okay, I believe it was a must be a 3:1 stock split. I believe 7, 14, 21, 28. No, 4:1. It must have been a 4:1. So one for every one share, you got 4 shares. Because it was trading around 280, right? I think. So yeah, this went through a stock split. Yep, here. Yep, 4:1. There we go. On 27 October. This stock has been consolidating to the upside. It's actually been a very good COVID stock to buy. If you had bought it on the dip, imagine $43. Right now, you would have doubled up your money pretty much, right? Just buying one company like this. Okay. What does this company actually do? This company actually is a utility company, okay, operating with different segments of business, okay. So let me okay. So sometimes you got to do the legwork for you. I'm doing the legwork for you guys. So I was reading all of this, by the way. It's interesting stuff. I love reading stuff like this. So what is NextEra Energy? Investment. Do stock splits usually hurt or help the valuation of a company? It could be more than likely it will help. It will help the valuation of the business. What is a stock split? Let's say you have let me try to explain it in the most simplest manner. You have a stock that is $500, right? And the stock and then there are 2 shares of this company that are open and floating in the market, right? Well, so what happens is when you split this into 2 and you do a 1:2 stock split, then this becomes $250 each. The total market value of the stock still stays the same. So the total market cap still stays the same. Your market cap is still $500, but what happens is that more people can buy the shares now. It's more cheaper, okay? It's cheaper. Usually when a stock split occurs, it helps the business to attract more investors. That's the reason why stock splits are done, right? Like Tesla and recently NEE, and what was the other one? There was a big one, another one. Apple, yes. Okay. So those are the reasons why people do stock splits, is to make the market more accessible for other investors who don't have that much money. Okay. So NextEra Energy, comprised of a strong business supported by a common platform. They have a 137 billion market cap, 55 gigawatts in operation. This is a lot of energy, by the way. 122 billion in assets. We're going to get into their assets a little bit. I was snooping around their balance sheet a little bit. This is a company that is actually, to give you guys the tea and spill the tea right away. This is a company that is investing a lot in infrastructure. So they are, they look at their current ratio and the quick ratio. What do we usually want these values to be, guys? What do we want these values to be? Can somebody remind me what do we want it? What do we want current ratios to be usually? Oh yeah, I didn't do the SPY breakdown. I'll do that in a second, Tyler. Let me go through NextEra Energy first, and then I'll end the stream with the SPY technical breakdown. You want it to be below 1 or above 1? That's the current ratio. Current ratio is always above 1, right? So that you have more current assets over current liabilities, right? So this business, it doesn't have sufficient assets to cover liabilities, right? On top of that, look at the debt to equity ratio here. The debt to equity ratio here is more than 1, which means it has more debt over equity, right? If the number is 2 over 1, that's 2, right? So this number is bigger than this. So therefore, this number is 1.3 on this, right? And 1, right? So therefore, it's 1.3, right? So for every dollar of debt, they have a dollar. Sorry, for every dollar in equity, they have $1.30 in debt, right? That's what this is telling you, right? For every dollar in equity, they have $1.30 in debt. Yes, everybody understand that? And here, they have half the assets to cover liabilities, right? Now, usually this would be a bad thing. This would be a very bad thing, right, for a business. But because this is a utility business, right? Because this is a utility business, they have to invest into a lot of infrastructure. Okay? And what is infrastructure for utility business? What is it? Property, plant, and equipment, and land. Right? Do any one of these things give you any income? Does land produce any income for you? No. Does property produce any income for you? Possibly. Does plant and equipment produce income? Yes, right? But land is the biggest thing they need to acquire as a utility business, right? Because this business has a very niche market, okay? So let me go through that with you guys. What do? They actually are the world leader in electricity generated from wind and sun. And if you're generating electricity from wind and sun, what do you need? What do you need? You need a shit ton of space. That's what you need, right? How do you generate electricity from the sun? You need to put solar panels out, right? And what do solar panels take? They take lots of space, right? And if you don't have space, what do you have to do? You have to go and acquire land, right? So this is the reason why this business has a very low current ratio. Okay, does that make sense? Now, if you were a regular investor looking at this from the outside, you say, holy shit, no, this is bad. This is a bad business to invest in. No, it's not, because they're strategically acquiring land, because that land will give them long-term gains. Right? Okay? Everybody understand so far? Cool. Okay, so they provide electricity to over 470,000 customers in Northwest Florida. That's one of the things they do. They have energy in construction, supply chain, wind, solar, fossil generation, and nuclear generation. Now they're starting to wind down their nuclear generation and wind, solar, and they're starting to ramp up these three. Okay. And the funny thing is, let me tell you guys a funny story. When I was in San Jose State University and I was part of the Spartan Fund, which is the $50,000 fund that we were running back then. In the school's program, we were actually pitching NextEra Energy to be put into the portfolio, and they said no at that time. They said no, and NextEra Energy was trading. This was in 2017. The stock was trading at the $28 level, and look at where it is right now. It's trading at $72. So if they would have held that position for a while, they would have actually tripled up. We saw this coming a long time ago. That's the reason why I know a lot about this company, because I was actually one of the analysts that was part of the industrials and utilities sector. And so therefore, I was looking into this company at that time. And we saw that they were making the pivot between nuclear to wind, solar, and fossil. And we said back then that this would be a good company to invest in about 2-3 years ago. And true enough, it has come true today. So they now another thing is, this business actually has it does renewable developments for other businesses as well. So it has a 1,730 megawatt backlog onto the second quarter that has added on. I think the total backlog is quite a bit. It was written somewhere down. I don't remember exactly the number, but it's quite a bit of a backlog. So they actually produce enough. They produce enough energy, and then they have a backlog for producing more as well. So think of them as like a like a Boeing of energy production. Right, they have the technology, but they only have so much of time and expertise to do it. So they have to spend a lot of their effort doing those kinds of things. Okay, long-term track record. Now look at this CAGR. What is CAGR? This is the cumulative average growth rate. Okay, so basically, if you're looking at the growth rate, like some years, maybe your business grows at, like 50%. The next year it grows at 30%. The next year it grows at 100%. The next year it grows at 20%. The next year, grows at, 150%, right? And so over this year, like if you were to take like 50 plus 30 plus 100 plus 20 plus 150, and then you divide it by 5, that would be your mean growth rate, right? But is this a actual accurate representation of your growth? No. Why? Because this actually has a compounding factor into it, right? This is a compounding factor because over years, your growth rate would expand on a compounding scale. So we use CAGR in finance to kind of smooth out the growth rate based on a adjusted basis. Okay, so it's the adjusted growth rate. Okay, we adjust the growth rate based on the year-over-year gain. Okay, so think of it like this. Maybe your growth is like this, right? So what is the CAGR? CAGR is like a line that goes through that shows you what's the average. Okay, cool. All right. So the CAGR for this company for the past 15 years has been about 8.4%, which is dope. For a utility company, that's actually very good. Dividends per share growing at 9.4%. That's also very good. Okay. Total shareholder return over the 10-year period, look at this, 500%. Okay. That's NEE. Compared to the S&P Utility Index, is delivered 200%. Compared to the S&P in general, is delivered 250%. So this company is actually a great investment for long-term holders, right? Okay. So if you wanted to put a utility company into your portfolio, you should start looking at this. Obviously, we haven't done a valuation of the business yet, which we will, okay? But we will on Wednesday, okay? Market cap wise, and then vision to be a most profitable clean energy provider in the world, committed okay, ESG highlights, environment, customers, employees, communities. We don't really want to know about this. This is they are on track to have their track record of growth. This is all the things they want to do. New wind, new solar, hydrogen, competitive transmission, battery storage, distributed generation. Now, the good thing about this company is they also employ hedging. And they actually hedge by holding, I believe it's gas. Natural gas, I think. Okay. Natural gas contracts. And yeah, they have a bunch of different things that they are hedging with. So they are long-term, like, this is the great thing about these kinds of businesses, right? Long-term, they're looking at like the renewable tech, but then what they do is they hedge the downside with natural gas and other kinds of non-renewables, right? So if anything happens to this, you know, they hedge against this, okay? Smart thing to do, right? It's just like how you hedge your portfolio. They do the same thing, okay? Disruptive industries changes today. AI, machine learning, big data, okay, all of this. Potential cost, and okay. U.S. electricity production by fuel type. From 2019 to 2030, wind and solar is going to be majority of the production. Natural gas is going to be some of it as well. And then coal and nuclear are going to be substantially less. Okay. Here is Florida and Powerlight recognized as best utility franchise in U.S. Vertically integrated, 5 million customer accounts, 28 gigawatt operation, 12 billion operating revenues, 59 billion total assets. This is what the areas that they operate in. Okay. These are all the CapEx expenditures. This also another thing, so it was I was telling you about, right? These are all the things that they're spending money on, right? What is CapEx? This is CapEx is spending on property, plant and equipment, and land, okay? So that's what property, your CapEx expense is going to be on, okay? So the recovery mechanisms are all on this side. You have all the status of all the ongoing projects, okay? And what they're actually for, all right? You can go read this at your own time. I'm not going to go through it too much. So CapEx here, they're expecting between 2019 to 22, 29 to 25 billion. And they want a 9% CAGR on the CapEx as well, which is pretty good, okay? Gulf Power, another company that belongs to them. And then, okay, this. They go through all this stuff, okay, and this. Let's see. So basically, these are all the different arms of the business, okay? They own different arms of the business. Energy storage costs, they even show you what is the energy storage cost, how it's going further down, okay? So which is a good thing, right? They, as further down, energy cost goes down, storage cost goes down, the more lucrative their business is, okay? Because they're in renewable business, renewable energy business. Battery storage opportunity, blah, 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 okay. Disruption, wind and solar market potential. They see this as the potential in this 2023, 2030. They're looking at almost a double growth from now till then, right? From 10 years from now. And then these are all the assigned contracts and expected contracts that they plan to do this. 14,400 megawatts renewables backlog is larger than the operating wind and solar portfolios of all but 2 other companies in the world, which is pretty crazy, guys. So you can think of NextEra Energy as like the utility company of the next generation, right? And you know, they operate within many segments, right? So that's the important thing of what you need to take away from what I'm telling you today on today's live stream. Okay, now on a technical perspective, this seems like a really great time to buy this company, to be honest. You know, playing this to the upside here. You know, a bounce over here would see it nicely go up back to the $80 range. you know, playing this as a swing trade is probably a good idea. So I would like to say, you know, if we see the actual bounce here in this demand zone, this should be a good trade to take to the upside. Okay. So that's the move on this one. Make sure you guys smash the like button. What's up, Robert? Robert, welcome in, man. We have 95 people watching this stream and only 69 likes. I mean, I like 69 likes, but still, can we get a couple more people to smash the like button? If you guys get to 90 likes today, that will make my day. I would really be happy. I would appreciate it. Thank you very much. Very, very much. Okay, that was a little bit about the company. This is the, you know, more stuff on it, and then the appendix down here that shows you more information. I hope that was helpful or make you understand what's going on. There's also the midstream conference. This was another thing I was reading, but not really that important. This one is not that important. And then I was reading the earnings for the third quarter. This was also important. But we'll go through this on Wednesday. This I was just reading in advance, so I'll go through this on Wednesday. Okay, sorry, I meant to do the SPY technical breakdown. Let me just do this real quick so that you guys are aware of what's going on here. Actually, not really that much to break down here, to be honest. SPY is now broken out of the technical formation where it was making higher highs, higher highs, higher highs, broke out of the resistance, consolidated for a while, and now might continue to run up. Okay, we might actually see this Christmas rally up. But I want to say, be cautiously bullish here. Okay, be cautiously bullish. I would still recommend taking some SPY puts, cheap SPY puts, okay, out the money SPY puts, in case a correction happens. Buy them as an insurance contract, okay? So you have many long positions and you take a couple of positions to the downside so that you can hedge your portfolio if something goes down, okay? I would say hedge your portfolio. And, you know, the natural level which we would see SPY come down to would be here, right? The 3.5, 3, you know, between 3.5 and 3.6. So between here, right here, right? Okay. So take some hedges which are out the money and you should be good. Okay. On the NASDAQ here, you can obviously see NASDAQ breaking onto all-time highs and then continue to run here. Also the same thing. Okay. Take a hedge on QQQ. The Dow Jones, also the same thing. But if you ask me, everything's looking great. Even the Fed, you know, everything looking pretty decent. Just be very careful. Manage your risk. And I recommend to avoid swinging things excessively. Don't take big swings in this market right now, okay? You don't want to be swinging unnecessarily, all right? Only take swings that are really worth the risk to reward ratio, okay? And that's all I have for you guys today, to be honest. You know, if we can get to 95 likes, then, you know, maybe next week I'll do a live trading session, which I've already promised you guys. Can we get a couple more likes in here before we end the stream today? I want to say thank you for all of you guys for tuning in, all 96 of you. I appreciate you guys being a part of the EJA tribe, as always. Stay tuned for the middle of December. It's coming and approaching really quickly. I can't wait to share with you what I've been building, and I think you guys are going to love it. I frankly am very, very excited, and I love all of you guys. Thank you for, you know, being loyal supporters of the EJA tribe, and I will see you guys on Wednesday. Wish me luck for my exams, guys. I'm going to be prepping really hard for it. So, you know, have a great trading day. Manage your risk. Make sure you manage your risk, and, you know, reach out to me. I think many of you guys have me on Discord. Reach out to me if you need anything, and, you know, I'll try to reply to you as much as I can. I'll be a little busy, but I will try to reply to you as much as I can. All right? Have a great day. Have a good one, guys. Take care, and see you on Wednesday, Fundamental Wednesday, as we do NEE's breakdown on its intrinsic valuation. Peace out, guys. Bye-bye.